Hello YouTube. Today we have a big test for the S&P and big news coming out. The big question is, are we going to break above this red line at roughly 411, which goes back to our June 9th high, and we are trying to complete a cup and handle pattern where we got back up to resistance, we could back off, form a handle, potentially break higher or break lower, or we can just poke and close above the red line and we are going to go up. This really matters because in the next 24 hours, we're going to be having Nancy Pelosi, again, anticipated to visit Taiwan. Not yet officially confirmed. We don't know. But the reason why this doesn't look good is because going back to the 1970s, I think it was, 1970s, she went to Beijing and was again, certain country in Asia. So that is the reason why there could be some rhetoric here. She's also the third highest ranking U.S. official. Again, after the president, vice president, the House of the Speaker is the third most political important person in America. So the fact she's going is a really big deal. And what I would note is that we are starting to see a little bit of exhaustion from the bulls, which just means that the tank is not quite as full as it was before. And I think that's really important because right now we are having a bear fueled rally. And if the pressure is removed from the bears, even for a little bit, we could get a dramatic move down, maybe even all the way down to the 50 DMA of 391, which would form a weekly higher low. Why could that happen? If there's no more rhetoric to continue to drag us up, the bears could be repositioned. And if the bears start to get exhausted or start to sell, that is where the pressure could start to flip. On the opposite side, there's also what if bears are already starting to get squeezed and now people are looking to initiate long, which means that now there is additional buying pressure coming in, which can sustain the rally. We note that buy, the fear and greed now getting to roughly 40, and only about 5 more points, and we're up here in neutral. After that, we get into greed, which is where we start going up a lot more. Just to step back for a moment here, it's important to remember that last month, or the month of July, was the best month since 2020. What does that mean? It means we added on $3 trillion in market cap, and 87% of S&P 500 stocks rise for the month of July. That's really important because everyone had the wall of worry from before in terms of the earnings season and just whether or not the Fed was going to turn hawkish. Well, $3 trillion added. 9 out of 10 companies went higher. I think that's bullish. And we can have a look here at the heat map just to confirm what exactly happened in the last 30 days. And we'll note here, we'll go back to last 30 days or performance in the last 1 month. And we note that, yeah, it's been pretty good. There's breadth, there is depth, and it looks good almost everywhere. All right, moving forward, this is really important because I think that tomorrow, with Nancy potentially having some news, Jolt's jobs openings, and then James Bullard speaking tomorrow night, these are the really important data points for the first half of the week. And then we're going to be focusing on Friday after that. So with the S&P currently at a big decision point, meaning we're either going to decide to go up or go down. And if we go up, all we have to do is close above the red line and the pressure continues to build up for us to shoot up to the 200 DMA. If we continue to close below, we could start forming a handle here where we decide if we're going to lose the uptrend and go down, or if we're going to maintain the uptrend and go up. It's that simple. And if we look at the volume here, we note that the green day today is actually more elevated than the red day, so that's still bullish. We look at the candle, it's an inverted hammer, but we closed higher than we opened. I don't know. And where we currently are on the chart, I'm not 100% sure where we're going to go. But by tomorrow, I call it lunch, and then really by Wednesday open, we're going to know, again, if James Bullard is the bulldog, and if we've been too bullish in stocks, like Bill Dudley's saying, again, former New York Fed chairman, is we're going to find out. Bullard's likely going to ramp up the rhetoric if he thinks that we should be more hawkish. And if he starts to not really say anything or make any news, it means more bullish news. Climb the wall of worry even more. This is really important because as we focus in on the monthly chart for the S&P, what do we have? Well, another green bar. Why? Well, we're closing higher than we opened. We opened the month at 409, and I would note this pink line right here corresponds with the single most important price for the month for me. It is 410.64. The reason why that number is so important is just because it's a pivot, meaning that where we are on the monthly is going to decide where we're going to go. As of right now, what do we have? We have a higher high and a higher low. What is that? It's bullish. We're trending up, bullish. Green candle, bullish. Is it enough? I don't know. It's only August 1st. Next thing I would notice that we look at where we put the low of the day, 408.4, roughly 2 points below 460.5 or 460.64, sorry. And then the high of the day is roughly $3 higher. The bulls made one extra point of progress to the upside than the bears did in downside. And the fact we had a higher high means that if we're going to self-fulfill and go up to the next area of resistance at about 417.44, we could do it. The momentum is already there. All we have to do is climb the wall of worry a bit more, and we get there. This is going to be interesting as well because seasonally, August and September are generally weak periods where the market goes down by roughly 0.6 and 0.7%. Then we have a big snapback for the Santa Claus rally starting in October. Again, sell in May and go away and come back on Labor Day. That's what this means. It means that we are anticipating the monthly close for the month is going to be roughly 0.6 and roughly 0.7, which means that we would be from last month's low, we would be down by 0.6% or roughly where we open. That would be a doji. So if we get a doji next month, the question is, where will the wicks be? Will the wicks be on the upside where now we form an inverted hammer? Or are they going to turn into another hammer, which looks similar to this formation right here? I don't know. But all we know is we are starting to form the candle. It's not yet formed. So this period right here would be especially frustrating for bears because they're going to be getting a little bit of their money back, but not enough for them to break even. And again, this pocket right here of roughly 420 down to roughly 410, you call it 400, is a big area of supply and demand. So we have to find out who's in control. Is it the buyers or the sellers? If we go green, buyers are in control. If we go red, sellers are in control. It's that simple. Last thing to look at here is I think that a lot of the bearish rhetoric, it's not that it's unjustified, but again, psychology is likely playing a big role here. And I have to thank Drew, who was on our Friday stream, for showing me a tool on TradingView, which is actually going to help a little bit here. So now I'm going to flip to my third chart of the day. And this one here is 1 divided by SPY on TradingView. The reason why this one is interesting is because we're taking inverse SPY. So when we look at SPY like this, everyone says, oh my God, we're overbought. Yeah, well, again, for me, this is helpful to look at. What might be better for you is to actually look at inverse SPY. So if we go into the search, we go 1 divided by SPY. We now get the inverse chart. And the reason why this is important is because, look, if this was a bullish chart, you'd say, whoa, well, it hit the first relative low and backed off, failed to hold the high after dead cat bouncing, and now it's testing the next high. What is that? Well, if it doesn't hold here, it's likely going down to the 50 MA. Yeah, which means what? More downside. So that's what we have to keep in mind here is when we look at this pattern, are we seeing what we want? Or when we flip it upside down, are we now noticing something that is different? I would note there are some bullish signals here, right? It's a cup with a handle. It's over the short-term average. I would also note that we are currently seeing more green volume, which means the bears are actually stronger. And what I would note is one final thing here. I would note the psychology chart. So again, I've been using this, and if you watch the video at the end, you'll find out more. But when I look at this and I look at the inverse of S&P for a weekly, again, I'm using the monthly chart for the bull case, but on the weekly candle here, again, I'm saying there's a pivot for the month. So what I'm not sure of is whether we're going to invalidate this pattern and default to using the monthly chart, or if there is an undertow on the weekly chart, which is going to feed through to the monthly. So look what I just drew here. A cup with a handle and a back test of the previous tops, roughly, right? So, okay, cool. Now let's go back to our weekly inverse chart. Oh man, that's like exactly what he just pointed out. Yeah. So again, psychologically, this makes sense for me. I understand what's happening. If I can show it to you visually, maybe now it's starting to click a little bit better. So technically, yes, we are inside of a weekly chart where the S&P should now be either moving higher and again, breaking out, which would mean what? A new low of the year. But the market can remain irrational longer than you can remain solvent. So if we continue to lose the lows, or again, go higher on SPY, and we go below the 50 MA, this chart is invalidated, and we cannot trust it. The monthly chart is going to be more reliable because it's a higher time frame. And at the end of the day, we need to understand at what point we are wrong when we look at our current market outlook. I don't know that I'm right. I'm just seeing more evidence that, again, team risk reward is being bullish. That was when we were at 380. What's the risk reward right now? I don't know. I think it's roughly 1-for-1 right now. Why? Well, we need to see what happens to the incoming data. So Team Bull, who made money, loves the risk reward here being bull. Why? They're doing what they've already done. And Team Probability is Team Bearish, who is, again, probably not aware that this pattern is setting up, but that's the reason why they are either reluctant or unwilling to look at the bull case. Again, this is a pretty strong case here, by the way, I just laid out for the bears. So it's not up to me where the charts go. I watch the evidence and I adapt my strategy based on what the market tells us. With that said, if you want to know what I think happens for the rest of the week, I prepared a weekend review, and that will queue up here in a moment where I will go through my deeper thoughts and tell you exactly what I think we're going to do. Thank you for watching. Look forward to seeing you tomorrow.